Hi everybody. So welcome back to audit class, and today's topic will be around internal controls, reports and communications. So under this topic we will discuss about the internal control weakness, internal control matters noted in the financial statement audit, which is for non-issuers, and integrated audit for issuers and non-issuers. So let's deep dive into it and let's understand it. So, firstly, if we talk about the weakness identified, internal control weakness identified, then there are three levels of the weakness: material weakness, significant deficiency, and control deficiency. So here we are talking about the control deficiency. So control deficiency exists when the deficiency design and operations of control does not allow the management or employees in the normal course of performing their assigned functions to prevent, detect or correct the misstatement on the timely basis. So control deficiency is something which prohibits which causes disturbance in preventing, detecting or correcting the material misstatements that have been identified on the timely basis. So if we talk about the design that exists in deficiency, then it can exist when a necessary control is missing or when an existing control does not achieve the desired objective. Few of the examples are insufficient control consciousness within the organization, ineffective aspects of the control environment, employees or the management who lack the qualification and the training to fulfill their assigned functions. So it's under the control environment. If we talk about further examples, ineffective entity risk assessment processes, evidence of an ineffective responses, inadequate documentation, absence of the internal process, inadequate design of the monitoring controls, inadequate design of the internal controls, inadequate design of IT general application controls, all this falls under the control deficiency. So and this is in the design, like while designing the controls, these are the weaknesses that can be identified, and therefore this should be focused while designing the controls in an organization. Now there are certain deficiencies in the control while operating those controls. Like few of the examples are failure in operation of effective design controls, failure of info and communication, failure of control designed to safeguard the assets from the loss or theft, failure to perform reconciliation of the significant accounts, undue bias, misrepresentation by the personnel, management override of controls. These are certain examples of uh, deficiency that can be identified in operations. So this should be focused while operating the controls in an organization. Now the second thing after the control weakness is a significant deficiency. So significant deficiency is a deficiency or combination of the deficiencies in an internal control over the financial reporting that is less severe than material weakness, yet important enough to merit the attention. So significant deficiency is something between control weakness and material deficiency that's found in the financial statement, which is not material but not even less that it should not be considered. It should be kept in the mind. It should be in focus, and it should also be given the high importance to get it resolved. After that comes the material weakness. Material weakness is a deficiency or combination of deficiencies in internal control over financial reporting, that there is a reasonable possibility that material misstatement of the entity financial statement will not be prevented, detected or corrected on a timely basis. So material weakness is something in the ICFR which gives rise to the material misstatement, and there are the chances that the deficiencies, the misstatements that have been identified will not be prevented, detected or corrected on a timely manner, and it may result in the difference of the opinion. It may result in uh, uh, certain biased opinion, or not something that the users of the financial statement will uh, get manipulated from. So some of the indicators of the material weakness are identification of the fraud by the senior management, restatement of the previously issued financial statement, identification by the auditor of the material misstatement, or ineffective oversight of the entity financial reporting. These are just a few of the examples of the material weakness that might present in the ICFR. After that, now we will talk about the applicability of the internal control communications. So there are for these are for different these are divided for the different types of the entities. One is for non-issuers, one is for the so one is for the non-issuers where we are doing the FS audit. One is again for the non-issuers where we are doing the integrated audit, and one is for the issuers where we are doing the integrated audit. So integrated audit is mandatory for the issuers, but for non-issuers it depends on the certain criteria and not heavily mandatory. So for the non-issuers we will discuss the applicability of the communications of the internal control for FS audit and for integrated audit both. So in the FS audit, auditor is not required to express opinion on the financial statement and not to express an opinion on the effectiveness of the internal control. And no opinion disclaimer that the purpose of the audit is audit on the internal control is required. Test of controls is not required. Auditor is not required to communicate any control deficiencies in writing, and there is a limited use of the statement for the management only. Like if there is any controls that has been identified, then that shall be given to management only for their limited use. But if the integrated audit is for the non-issuers, then that is optional for the non-issuers to have the ICFR. And then if they are performing the integrated audit, then the opinion whether management maintained effective ICFR or not is required, and the auditor is required to perform the test of the controls. Auditor should look out for the material weakness in the internal control. Auditor is required to communicate by the release date within certain timelines. Auditor is required to communicate the and that is for the general public distribution. And these are similar to the integrated audit as well. Like all issuers are required to get ICFR done. Depends on the auditor is required to give the design required to give the opinion on the design and operating effectiveness of the internal control. Also, if auditor should look for the internal control deficiencies, material weakness identified, and it should be for the general public distribution to understand for the to get it understood by the general public. Now here we will discuss about the auditor's responsibilities with regard to the internal control deficiencies. So determining if deficiencies in internal control have been identified on the basis of the work performed. Auditor may discuss the relevant facts and circumstances of the auditor's finding with the appropriate level of the management. In the process, auditor may obtain other relevant info for the further consideration. Few of the examples are management's understanding of the actual or suspected causes of the deficiencies, or preliminary indication from the management of its response and findings. And these discussions provides an opportunity for the auditor to timely alert the management. Also, if some circumstances it may not be appropriate for the auditor to discuss the auditor's finding directly with the management if those are related to the management fraud. Now, while evaluating the identified deficiencies in the internal control. So if auditor has identified deficiencies in the internal control, the auditor should evaluate each deficiency to determine whether individually or in combination they constitute significant deficiency or the material weakness. So auditor should see individually and in the combination if that gets at par with material weakness or significant deficiencies or not. So magnitude of the potential misstatement may be in the amount or the volume of the activity. There can be certain likelihoods such as nature of the financial statement or cause of the frequency, susceptibility, subjectivity, complexity and extent, interaction or relationship, interaction with other deficiencies, possible future consequences. All these are the likelihood where deficiencies can be present, and auditor should be mindful here. Now, while communicating the deficiencies, significant deficiencies and material weakness that happen to be identified during the audit, uh, including if those are remediated during the audit, then auditor should communicate in writing, mandatorily in writing, to the appropriate level of the management, generally CEO or CFO in this case, and timely basis, and to the TCWG on the timely basis. Written communication is required within 60 days of the report release date. Note that the timing is by the report release date in the case of integrated audit. For significant or urgent matters, may communicate earlier. Just a minute. So now we will discuss other control deficiencies, which are other than significant deficiencies or material weaknesses. So which are of sufficient importance based on likelihood or potential magnitude to merit the management's attention. Auditor should communicate in writing or orally. It's not mandatory only in writing; it can be orally also to appropriate level of the management. Uh, that if any previously deficiency exist, or certain circumstances or deficiencies that has been identified, auditor is not required to repeat any deficiencies which has already been communicated to management, either in internal audit or through any other mode of communication. And in such circumstances, TCWG may wish to be made aware of details of other control deficiencies than that the auditor has communicated to management. So these type of other deficiencies should be communicated to TCWG as well, which comes to the attention of the auditor. Uh, uh, so auditors written communication of the significant deficiencies and material weakness. Significant and material deficiency weakness should be in written only. So what should be written in those? So firstly, they should define the material weakness and the relevant definition of the significant deficiency as well. Describe the significant deficiencies and material weakness and explain their potential effects. They should include the sufficient information to enable the TCWG and management to understand the certain context, such as purpose of the audit. Audit included consideration of the internal control, auditor's consideration of the internal control. All this should be included. Restriction of the use of the auditor's written communication, and if no material weakness were identified, auditor can state so in the communication, but do not state that no significant deficiencies were okay. So if material weakness is not identified, auditor can make a note that no material weakness is found. But if there is no significant deficiencies found, auditor should not write that there is no significant deficiencies found in the audit. uh, After that, now we will discuss the integrated audit, which are for both issuers and non-issuers. So issuers, in the case of the issuers, they are subject to the requirements of the PCOAB. The auditor will have to perform an audit of the internal control over the financial reporting. We will call that as a ICFR, uh, to ensure the compliance of the certain rules. Few of there are exemptions, which are non-accelerated filers, or which are like IPOs or very startups. All these are exempted. Certain rules are there for the exemption. For the non-issuers, ICFR is optional, but again subject to the requirement of the generally accepted accounting standards when conducted. Um After that, uh, what are the auditor's responsibilities and requirements for both issuers and non-issuers in the case of internal control? So objective of the engagement, like they have to obtain the reasonable assurance whether material weakness exists or not, express an opinion on the effectiveness of the ICFR. So firstly, obtain the reasonable assurance on the material weakness, and then express opinion on the operating effectiveness of the ICFR. So if one or more material weakness exists, the entity's ICFR cannot be considered effective. However, identification of one or more material weakness in ICFR does not justify the auditor ceasing to perform the procedures to evaluate the effectiveness of other relevant controls. there are certain requirements, so preconditions for the audit of the ICFR. Auditor should obtain the management's agreement that acknowledges and understands the responsibility for designing, implementing, and maintaining the effective ICFR, evaluating effectiveness of ICFR, supporting the assessment about the ICFR, providing the auditor's access to the relevant information which management is aware of. Also, auditor should determine that as of date correspondence to the balance sheet date if auditor is engaged to the audit of the ICFR. Auditor should evaluate the effectiveness of the entity's ICFR using the same suitable and available criteria used by the management policy assessment. Auditors should also request the written assessment for the management about the effectiveness of the entity's ICFR. In the case of the integrating the audit of the ICFR with the financial statements of the audit, all the objectives of the audit of ICFR and FS are not same. Auditor should plan and perform the integrated audit to achieve the both respective objectives simultaneously. So auditor should design the test of the controls to obtain sufficient appropriate audit evidence to support auditors' opinion on the ICFR and support auditors' control risk assessment for the purpose of the audit of the financial statement, because this can be done simultaneously, and if the auditor does not do simultaneously, it will just cost a lot of the money and utilization of a lot of time. Auditor should consider the effect of the result of the financial statement audit procedures on the auditor's risk assessment. If during the audit of ICFR, the auditor identifies the deficiency in the ICFR, determine the effect of the deficiency, and if annuity, nature, action, timing needs to be changed or updated, that should be done accordingly. Planning of the ICFR. So, firstly, the role of the risk assessment, addressing the RMM due to the fraud, and using the work of internal auditors and determining the materiality. Again, here auditors use the top-down approach in the most of the cases. So, firstly, they will do the entity level control that we have discussed previously. Then, evaluating the components of the ICFR, the 5 components that we have discussed, and then period and financial reporting process will be done, and then identifying the significant class of the transaction accounts balances like at assertion level, first at the financial levels, then at the assertion level, and understand the likelihood and sources of the misstatement, and selecting the controls to the test, like which controls are going to be tested.